Hello, my dear CMA students. Welcome you all. Today we are going to start a new chapter in our corporate accounting paper. So the chapter name is Preparation of the Statement of P&L and Balance Sheet as per Schedule 3 of Companies Act 2013. That is exactly the name which is given in the CMA study material. So to put it simply, preparation of financial statements of companies we have to learn according to Schedule 3 of Companies Act. Now this chapter is there as a chapter number 2, unit number 2 in your study material. So let us start with the chapter preparation of financial statements of a company. So we are learning corporate accounting. So that means we're learning about companies. So in first chapter we learned about what is company, what are the features of the company, and the concept of share capital, how accounting is to be done when a company issues shares, and we have learned when there is a forfeiture of shares, what is the accounting treatment, when there is a reissue of the forfeited shares, what is the accounting treatment. All those things we covered. Now in this chapter what we are going to cover is the preparation of financial statements of a company. How to prepare the financial statements of a company. This chapter is paramount important because preparing financial statements of a company, and because financial statements are used for almost in all kinds of financial decision makings. So understanding of the financial statements is must and necessary for every professional. So you should have a thorough knowledge on how to prepare balance sheet of a company, how to prepare P&L account of a company, and how to present the items in the balance sheet, how to present the items in P&L account. You should have a complete knowledge. So this chapter perhaps the most practical chapter which helps you when you go for a job or when you go for an article, industrial training. Perhaps this is the only chapter which helps you a lot. And in this chapter basically what we have to learn is Schedule 3. So Schedule 3 of Companies Act 2013 we are going to cover. Schedule 3 of Companies Act 2013 we have to cover in this chapter. Now Schedule 3, Division 1, Division 2, Division 3, like that there are 3 divisions in Schedule 3. Now in that, the division number 1, in that there are 2 parts, part 1 and part 2. Part 1 talks about the balance sheet format. Part 2 talks about the P&L account format. Now basically we have to prepare the financial statements of a company as per the format which is given in the Companies Act. And also this Schedule 3 has given certain instructions, general instructions for preparation and presentation of financial statements. Now these instructions whatever given in the Schedule 3, we have to follow them while we are preparing the financial statements, while we are presenting the financial statements. See, preparation of financial statements and how to present the items in the financial statements. So both things, preparation and presentation, are covered, and as per Schedule 3 we have to prepare and present the financial statements. Because every company at the end of the year they have to prepare balance sheet, they have to prepare P&L account. Now how they need to prepare, what information they need to disclose, so which information they need to disclose, all those things are covered in Schedule 3. Therefore Schedule 3 is making mandatory for every corporate organization to prepare your financial statements in such a manner, in such a format what we given, so that whatever the necessary information It should not be missed. And users of financial statements should know the complete information about the organization. So suppose, see, who are the users of financial statements? For example, shareholders of a company, owners, creditors of a company, debenture holders of a company, and bankers, those who given loans to the company, government, and the tax collecting agencies like government, I mean CBDT, and I mean indirect taxes department, GST department. All these people, they will see your financial statements. And so that's why these financial statements takes place a paramount important in the users of financial statement circle also. Not only that, suppose if anybody wants to assess how the company performance is, how the balance sheet of the company, how the financial position of the company is, they will definitely check the financial statements. Now, these financial statements have to be prepared in such a manner that the company is giving the information to the users through these financial statements, so that the information should be true and fair view, and the information should be complete to the extent possible. Now, given a choice, how companies will prepare financial statements? Definitely, no company want to prepare financial statements more elaborately. So they don't want to disclose all the information. They feel this may not be necessary for users of financial statements. So that's why through Schedule 3, the Act is making mandatory for every organization. What you are feeling is not correct, what you are feeling is not necessary for us. What we feel is this is the information, in this is the format you need to prepare your financial statements. So the law is drafted, the schedule is drafted keeping in mind the requirements of users of financial statements, keeping in mind where there may be a fraud may happen in the company. Now, through disclosure, through presentation, through disclosure requirements, maybe Schedule 3 is trying to bring out all possible information from the company which may be relevant to users of financial statements. Users of financial statements. And one more thing, sir, Schedule 3 is only a minimum requirement. So it is not that I am preparing financial statements as per Schedule 3. No, Schedule 3 is a minimum requirement. This is a minimum thing. If you want to prepare financial statements more elaborately, if you want to give more information to the users of financial statements, Schedule 3 is not going to restrict it. So the main object of Schedule 3 is to bring one kind of system, one kind of uniformity in the preparation of financial statements. Now, you have to learn the format as per Schedule 3, how to prepare the balance sheet, how to prepare the P&L account. Along with that, you have to learn each item which is there in the balance sheet as well as P&L account, what information we need to disclose in respect of those items as per Schedule 3 in the notes to accounts. That is also we need to learn. Now, basically in this chapter, what we are going to cover? See, in this chapter, what we are going to cover is Schedule 3. Entire Schedule 3 we will discuss P&L account format, information to be disclosed in P&L, balance sheet format, information to be disclosed in the balance sheet. All these things we will discuss, and we'll try to solve certain questions relating to Schedule 3 as well as the total balance sheet and P&L account sums. Now, sir, if you recollect, in first chapter, accounting for issue of shares and debentures, first we discussed about a company. There we discussed about the meaning of financial statements. See, every company will prepare financial statements every year. If you remember section 129 of Companies Act, I already covered in chapter number 1, or we'll discuss now. Section 129 or section 120. So it is the responsibility of the company. They have to prepare financial statements every year. So maintenance of books of accounts. Every company every year have to maintain proper books of accounts, proper documents and financial statements which will give true and fair view of state of affairs of the organization. So this point we covered already. Again, we are going to discuss in this chapter now. And also in chapter number 1, we discussed what is financial statements. As per section 2 clause 40 of the Companies Act 2013, financial statements include the following: What is financial statements includes balance sheet as at the year end, P&L account for the financial year, and if you are a non-profit organization, instead of P&L account we will prepare income and expenditure account. Next, cash flow statement for the financial year we learned. Next, we discussed about statement of changes in equity, and also we discussed about financial statements includes any explanatory statement, notes to accounts forming part of the above. So this is the meaning of the financial statements. So first, in this chapter, before going to start schedule 3, there are certain basics we need to cover. What is the basics we need to cover? First, we need to understand the meaning of financial statements. So first we need to understand the meaning of financial statements. So meaning of financial statements, of course, of a company, because the chapter name is financial statements of a company. So meaning of financial statements, and as per section 2 clause 40 of Companies Act 2013, financial statements include the following. So what are the things which is included in financial statements? Balance sheet is the first one. Second one, P&L account. And generally balance sheet is a point statement, I told you, which is prepared on a particular point of time. So balance sheet as at year end, as at or as on year end, whatever, as at year end. And P&L account for the financial year, balance sheet as at financial year end, P&L account for the financial year, and then cash flow statement for the financial year, Next, statement showing changes in equity, statement showing changes in equity, if it is required, it is also be prepared, statement showing changes in equity if required. And also any explanatory statement, notes to accounts forming part of the above, So these are financial statements. Now see, in this chapter what we are going to cover is balance sheet, P&L, cash flow, balance sheet, P&L, notes to accounts. And this statement showing changes in equity, there is nothing to learn here. This is a statement of changes in the share capital, so which is not going to be a topic to be discussed, therefore forgot about this. So remaining 4 we are going to discuss, but in this cash flow statement will be discussed in a separate chapter, because it is to be discussed interlinking with accounting standard 3. So therefore it will be a separate chapter. So therefore in effect in this chapter we are going to cover what? Balance sheet, P&L and notes to accounts. So this is the meaning of financial statements. Now one more important point, sir, frequency of financial statements. See how frequently we will prepare financial statements, frequency of financial statements. See, generally there will be annual financial statements. That means every year, once in every year we will prepare financial statements. Once in one financial year we will prepare financial statements. Of course, suppose if you are a listed company, maybe they are required to prepare financial statements on quarterly basis also. So generally there will be annual financial statements. Annual financial statements means once in a year, once in a year we will prepare financial statements. Sometimes if you are a listed company, anyway you are going to prepare annual financial statements. Along with that you need to prepare quarterly, every quarter you need to prepare financial statements, quarterly financial statements. Every quarter we need to prepare financial statements. Maybe if they are required as per the listing agreement, as per the SEBI guidelines, if they required, they have to prepare every quarter financial statements also. So frequency of financial statements, generally every year. Sometimes if you are a listed company, you have to prepare financial statements on quarterly basis also. Now see here, one important point we need to learn, sir. What is financial year? In your study material, this definition is also there, sir. So please, if you have a study material, see the definition of financial year, which is very important. So generally, what is financial year? Section 2 clause 41 says about the meaning of financial year. Financial year means in relation to any company or body corporate, means the period ending on 31st March every year, where a company has incorporated on or after first day of January of a year. The first financial year will end on 31st March of the following year. If a company or a body corporate which is holding company or a subsidiary or associate company of a company incorporated outside India and is required to follow different financial year for consolidation of its accounts outside India, the tribunal may, if it is satisfied, allow any period as financial year, whether or not that period is year. See, generally what they are trying to tell you is, as per section 2 clause 41, in relation to a company or a body corporate. So what is the financial year means? The period which is ending on 31st March of every year. So that is financial year. That means obviously it will, suppose if it is ending on 31st March, so obviously the next financial year will start from 1st April, right? So 1st April to next year 31st March. So this is fixed. So what is financial year? If anybody asks you, you have to tell. So the financial year is 1st April to 31st March of next financial year. So that's why companies will follow this. Companies generally will prepare their financial statements. Suppose balance sheet as on 31st March, P&L account for the financial year, suppose 23, 24, 23. Suppose for example right now, so what is the financial year? The financial year may be 2023-24. That means it is from 1st April 2023 to 31st March 2024. This is the financial year. Now for this financial year, we will prepare financial statements. For this financial year, we will prepare financial statements. So this is the concept of financial year. Just remember this. There is a definition. Now frequency also we discussed. What is financial statements also we discussed. Now one more important point, sir. Regulatory framework for preparation of financial statements. Sir, I think if you remember chapter number 1, so I have discussed the regulatory framework for companies in respect of shares. 3 things I told. If you are a company, you are guided, I mean you are bound to follow 3 things. Those are Companies Act, company accounting rules and accounting standards. So what is the regulatory framework relating to preparation of financial statements? Suppose if you want to prepare financial statements of a company, what are the regulatory frameworks you need to follow? Important at this one. So regulatory framework, regulatory framework for preparation of financial statements. Regulatory framework for preparation of financial statements. What is the meaning? Sir, if suppose if you want to prepare financial statements of a company, what things you should keep in mind? I mean, which rules, which provisions you need to follow? First, there are 3 things you should keep in mind. First, provisions of Companies Act. Provisions of Companies Act. So therefore, the Companies Act 2013 we should follow. Second thing is the company rules. If any rules are there, the company rules, if there, we have to follow those rules. Company rules, company accounts rules 2014. So the company's accounts rules 2014. This is one thing. And the most important thing is accounting standards. So keeping these three things in mind, we should prepare the financial statements. Now see, important. Sir, where is schedule 3 here? It is covered here. Schedule 3. I told you schedule 3 is part of Companies Act. Therefore, definitely when you are preparing financial statement, you should follow Companies Act. So Companies Act has prescribed schedule 3. Therefore, according to schedule 3, we need to prepare the financial statements of company. And there are some rules relating to company accounts. So those rules also, if they are required for preparation of financial statements, they should also be considered. And accounting standard, of course, accounting standard plays a key role in preparation of financial statements. If you observe accounting standard, there are some disclosure requirements. All those disclosure requirements where we need to make in financial statements, notes to accounts. Of course, notes to accounts is also part of financial statements, I told you. Okay, so I discussed, so we started the chapter relating to preparation of financial statements of a company. That is nothing but we have to learn how to prepare financial statements of a company. Now in that, first, what is the financial statements meaning? As per Companies Act, the meaning is financial statements includes balance sheet, P&L, cash flow statement, statement showing changes in equity, notes to accounts, forming part of the above. Out of this 5, statement showing changes in accounting, there is nothing to learn. It is nothing but changes in shareholding pattern of the shareholders. So we need to learn how to prepare balance sheet, P&L, cash flow statement, notes to accounts. And cash flow statement will be discussed as a separate chapter. Therefore, in this chapter, what we are going to learn, how to prepare the balance sheet, P&L and notes to accounts. Now to prepare balance sheet and P&L, there is a format which is prescribed in schedule 3. Now that format we have to learn. That format talks about the presentation as well as the disclosure, preparation as well as the presentation. Now how often we need to prepare financial statements? Generally, every company will prepare financial statements annually. That means once in every financial year. But if you are a listed company, then there may be a requirement that you have to prepare financial statements quarterly also, as per the listing agreement with SEBI. See, whenever a company wants to issue its shares to public, they have to list, they have to enter into a listing agreement with SEBI. Now according to the listing agreement, sometimes it is mandatory for every company to prepare financial statements every financial year. Now what is the regulatory framework for preparation of financial statements? This is very, I also discussed about financial year definition. Financial year means 1st April to 31st March. Now regulatory framework for preparation of financial statements. So whenever you want to prepare financial statements, so there is you have to follow the Companies Act, you have to follow the company accounting rules, and also you need to prepare the accounting, you need to follow the accounting standards. And now sir, talking about preparation of financial statements, there is one section in Companies Act, that is section 129 of Companies Act 2013. This section talks about financial statements of a company. See, what this section says is some simple points they are saying. First thing is, whenever you are preparing financial statements, you should keep in mind the ultimate object is true and fair view. That means your financial statement should give true and fair view of state of affairs of the organization. So they are saying that basically you prepare financial statements, whatever happened in your organization, you truly present them. So true and fair view you should give. That is the essence of the section 129. And also they are saying that whenever you are preparing financial statements, you should keep in mind the provisions of Companies Act. You should keep in mind any rules we have framed. You should keep in mind accounting standards. This regulatory framework you need to, what we have discussed now, this you need to follow. That point is also there in section 129. So what is 129? Whenever you are preparing financial statements, main objective is true and fair view. No window dressing, no manipulation, no misstatement. Try to prepare financial statements true and fair view. It should reflect true and fair view. Second of all, when you are preparing financial statements, keep in mind accounting standard provisions, keep in mind the Companies Act provisions and rules, company rules provisions. One more interesting point which is prescribed in section 129, sir, which is very, very important. See, every company, after preparing financial statements, those financial statements must be laid down in the annual general meeting. Sir, I told you in basics chapter, I mean first chapter, generally once the financial statements are prepared, after that every year company will conduct one annual meeting, that is called annual general meeting. So to that annual general meeting, all the owners, shareholders of the company will be invited. There, the financial statements of this year will be approved. Because usually, suppose if I am the sole proprietor, what happens? At the end of the year, I will prepare P&L account, I will prepare my income statement, I will prepare my balance sheet, and I will see whether this year, how is my performances, whether I have achieved profit or I suffered loss, what is the position of my assets, I will see and I will know. What about a company? Company will have so many owners, so many shareholders. So therefore it is the responsibility of the board of directors who is running the company at least once in a year. So they have to, I mean, they have to take the responsibility for preparation of financial statements. Once the financial statements are prepared, they must be audited by an auditor, and along with this audit report, these financial statements must be laid down before the AGM, annual general meeting, where the owners of the company will be invited. Now the owners of the company will see the financial statements and they will give their approval. So this is the basic idea, because I told you how company will going to function. In company, the management, the ownership are two separate elements. Management is in the hands of directors, ownership is in the hands of shareholders. Now once a board of directors are appointed, so remaining shareholders will not interfere into the day-to-day activities of the board of directors. Now board of directors responsibility is to manage the company on daily basis, and it is their responsibility that they make sure that every company will prepare the financial statements at the end of the financial year. And once the financial statements are prepared, they need to make sure the company will conduct one annual general meeting. In that annual general meeting, all the financial statements will be laid down, where the shareholders will approve the financial statements. Now that's the basic idea of section 129. So section 129, what is the gist of 129? If you ask me, I will tell you 2 points. First point is true and fair view. Second point is regulatory framework. Third point is, once you prepare financial statements, it will be approved in the AGM. And also one more interesting point is there in section 129, sir. What is that? If you read 129, sir, it is talking about consolidated financial statements. Suppose if you are a parent company, that means you should have you have subsidiaries, right? Whenever you have a subsidiaries, you are a parent company, and every company will prepare its standalone financial statements, right? Along with the standalone financial statements, they have to prepare a consolidated financial statements also. So the preparation of consolidated financial statements by a parent company, consolidated financial statements, that means financial statements for the entire group, is there in section 129. So what is 129, sir? 129 says, first point, financial statements should give what? Always true and fair view. Should give true and fair view, and it is always reflect this true and fair view. True and fair view. And then when you prepare financial statements, keep in mind the regulatory framework. What is regulatory mind? Regulatory mind means Companies Act 2013, company rules wherever they are, and accounting standards. These things you should keep in mind. That is 129 says. And next important point is, it is the responsibility of the board of directors to lay down the financial statements in AGM. So board of directors must lay down financial statements before AGM. So therefore, who has the responsibility to prepare financial statements? Board of directors. They have to take a charge. They need to make sure that every company will prepare financial statements. Okay. And then that means lay down financial statements before AGM means that once it is laid down in AGM, financial statements will be approved. Approved by whom? Approved by shareholders. Approved by owners of the company. Approved by shareholders. They have to be approved. And one more interesting point which is there is, section 129 says, if you are a parent company, holding company, parent or holding company, so they have to prepare financial statements. So sorry, they have to prepare consolidated financial statements along with the independent financial statements. They have to prepare consolidated financial statements. What is consolidated financial statements? Financial statements for the entire group they have to prepare. Okay, so this is section 129. See, these are all important points you have to learn before starting learning schedule 3. So that's why I'm giving all this requisite information which is there even in your material. And now we are going to start schedule 3. Now in the beginning itself I told you schedule 3 is what, sir? General instructions for preparation and presentation of financial statements. Now this schedule 3 has divided into 3 parts, sir. Division 1, division 2, division 3. Division 1 talks about financial statements of a company which is required to follow normal accounting standards. Division 2 talks about financial statements of a company which has to follow Indian accounting standards. Division 3 talks about non-banking financial companies. In this we have to cover first division 1, that is we have to learn financial statements of companies which are subject to following accounting standards. That is division 1 we need to follow.